Hey everyone, this is Martin from MI5. Welcome back. This is my first video I haven't made for a long time. So if you guys are current subscribers, welcome back. And today I want to talk about bag holding SoFi stock or SoFi technologies, or matter of fact, any stock, because they're all doing terrible right now. So it's not just about SoFi specifically. So what is bag holding exactly? Well, it's pretty much what I'm doing now. You guys can see, well, my average cost was 1677 when this thing started to go down, and I sold a little bit, and I dollar cost average, and now I have an average of 1478, which is better, but still not good considering SoFi is nowhere near that range at this time, and nobody can tell when it will ever get back to at least 1478, 15, maybe 16. It could be a long time. So that's why they call it bag holding, because you're holding it because you're at a negative, which I am now. So you can see I'm down $4,231.74. And meanwhile, I'm not making any money with the position that this is tying up, because if you guys don't know, I'm a day trader, and I went to make a swing trade and got stuck holding on to the stock because I didn't want to lose the amount of money, that I could lose if I sell it, because you don't lose till you sell, and I'm not sold. I sold some, took a little bit of a loss, but I got the dollar cost average down to 1478, which is pretty good, but SoFi is still nowhere near there, and it's hard to tell if it's going to start going back up, or if it's going to continue to see new lows. Many are saying it's going to go down to $10, maybe even lower, and not so soon of a time. And if that happens, then it'll tie up my money even longer. And I feel, as a day trader, that if I get this thing to go up, let's say to anywhere near what it did today, 1323, maybe at least 14, then I might sell it at a slight loss and then continue to day trade it, because let me show you what I'm talking about. So today is the 11th. If I would have bought in at 1182 from scratch, at 1182 dollar cost average cost, and then on the 10th sold it at 1338, you see, I would have made a profit off of it, instead of just holding on to it the way I'm doing now, losing all its potential because I'm not making any money. In fact, I'm negative on it. Now, I am day trading other things, but this is tying up some of the capital, and it's getting ridiculous. I should have sold it on January 20th at 1637. I would have took actually, with this average cost, I would have actually made money. But I was thinking it was going to go up higher still. Still had not set in of this bear market, and that was my mistake. Then it immediately went down to 12 on the 24th, and then it was in the $10 range on the 28th. I think it got down to 1051. It won't show it on this chart, but I think it got down to 1051 at some point. Like I said, in the title, it's going to be saying, the thumbnail, it's going to say bag holding SoFi, because that's what I have. I mean, you guys might have something else and be in the same exact position. So it's bag holding any stock, not just SoFi Technologies. They're all doing bad right now. Very few stocks are doing well. Like I said, if you were day trading SoFi right now, you could have made some money getting in at 1229 and selling it. You could have sold at 1637. That would have been a great swing trade, because it's 2 days. Day trade would be just one within the same day. But you don't want to day trade when you are up here, January 26th, and then on the 27th you're down here at 1208 versus 1355. Now, I'm going to tell you guys, because if you're a repeat viewer or a brand new, I am not a stock analyst. That's not my thing. I do talk about my stocks because the stock market is actually what helped me to do that finishing touch to become a millionaire in the first place in 2020. But I try to keep it simple. I try to keep it basic. I'm not going to talk about fancy charts and use all this crazy jargon to talk to you guys, because one of the main things about the stock market is they use those fancy terms and all this jargon and slogan and all this stuff to keep the average man and girl out of the stock market, because they don't want you guys making money in the stock market. They want it just to be these big hedge fund people and these industrial people making this big money, and they want to keep you guys out of it, the average retail investor. So they use these big terms to intimidate you guys, so you guys don't understand what's going on, and they overcomplicate it just because they don't want you guys making money and getting in their way. Now, like I said, what I'm doing now is considered bag holding because I'm stuck with it, right? And I want to move on to talk to about another term or slang or jargon, what they call paper handing. So paper handing is when you buy a stock. Let's go back a little bit. We can't really do it because it's been a decline for quite some time. Okay, let's go back this way. Still not a good chart for this particular stock. Okay, let's just say you bought at $13.75, right? And nobody knows how the stock market's going to go. People will say they do, they really don't. Okay, so you bought at $13.75, got up to $15.47, and you're like, yes, it's really cranking now. Then it goes down a little bit, you get scared, then the next thing you know, it goes up to $17.64, and you're like, you know what, I'm gonna sell now, or it'll go down just a little bit down to $17.04, and you're like, okay, I think it's just gonna go down from here or plateau. So you sell at $17.04, and then later on you realize it went up to $20.85 and $23.29. You're like, damn it, I sold too soon. There's nothing wrong in profit taking. Don't ever try to buy at the very bottom, whatever that may be. On here, this chart, you can't really tell too much, but let's just say the bottom of $13.75. You're like, oh, I'll buy at $13.75 and sell at $23.29. Yeah, bull. Ain't gonna happen. Almost nobody does that. The bad things about charts is people can always go back and say, oh yeah, well, I would have bought at $13.82 and sold at $23.29. Well, of course you would if you knew for a fact that it was going to do that, but you don't. Nobody knows. All these stock analysts and predictors and everything, they don't know anything. Most of the time, they're wrong. They have monkeys that could throw darts at stocks and do better predictions than like these so-called professional analysts and advisors and all this stuff. If all these stock market brokers were as good as they think they were, they wouldn't be working for other companies. They'd be making millions and millions and millions of dollars for themselves if they were truly good at what they do. The only thing they're good at is charging you money to invest for you. That's about it. Another term I'm going to talk about is the so-called diamond hands. And that's holding on to a stock no matter what if it's up, you hold it. It gets down here, you hold on to it. It gets back up here, you hold on to it. You don't sell it. It gets down here, you hold it. It gets down here, you hold it. It goes back up, you still hold on to it. You don't sell. Okay? And that works somewhat over a very long period of time. But in this volatile age with crypto and all that stuff, it's not necessarily the best way to do it. You'll make more money in the long run by buying low and selling when it gets to a certain level instead of just holding it forever. Yeah, just ask the so-called Dogecoin millionaire how that worked out for him. If you guys don't know, the guy bought Dogecoin at I don't know what price. It was really, really low. And Dogecoin got to like 71 cents or whatever. And he could have sold at that point. And he was advised to by many financial gurus here on YouTube who told him, dude, you're going to make 3 million, maybe 4 million at one point. I would sell now. And he's like, no, I'm going to hold it. I'm going to diamond hand it for the movement. He was more about the movement than he cared about making money, which is weird because he went and like take out all these loans, use credit cards and all this stuff because I thought he was serious about wanting to make money. But when he had a chance to make like 4 million or at least 3 million, he chose not to because he was more into the Dogecoin movement. People quit falling in love with these movements and these coins. And if you're not in the stock market to make money, I don't even know why you're here. I mean, if you care about movements, don't put your money into it. Just support whatever movement, but don't put your own money on the line to support a movement. That's stupid. In my opinion, that's dumb. I mean, look at it. All the AMC people that said they were going to hold to the moon. They were going to have this big squeeze and all this. Look, let's take a look at what AMC's at. Look where we're at with AMC. It's like 1884 right now. In the day, it got up to like 1963. Where are all these people that were saying it was going to go to $1,000 a share, $10,000 a share? I heard people saying $100,000 a share. And I was like, are you freaking kidding me? You guys are nuts. And they were holding it because they thought it was going to go to $100,000 per share. You only needed one share to do it, And I'm like, that is just totally insane. I never believed that from ever. And it never will get to $100,000 a share. That's ridiculous. Let's go back a little bit. A month ago, it was at 22 something, almost 23. 3 months ago, it was at 42.68. 1 year ago, it was at 62.55. That's as high as it ever got because it was pumped up. Okay, now don't get me wrong. People that bought in at these levels here in a large position, that probably made a lot of millionaires, or at least thousandaires. Okay. Yeah, but ever since then, it's just been a steady decline, and people stopped caring about the apes movement. I don't know where they got apes from, but yeah, let me know how you guys are doing with that. If you bought in at, say, $30, $40, man, look where we're at today. 1884. That's why I don't care about movements. It's stupid. You should be in here to make money. I don't care about these movements. And you shouldn't either. I mean, you can support a company and be like, yeah, I hope they make it, Don't put your own money on the line, especially when you're just a retail investor. You're not that big, dude. You're not going to change the world by buying $100 worth of AMC and holding it to the moon. It's just not going to happen. So if you guys notice, I did pull some money out of my Robinhood account and from other accounts, SoFi and also Webull. You can see my buying power is lower because I took some money out and I also lost some money. But I put it in some other stuff because I'm an entrepreneur. I'm not here just to do stock market or nothing at all. I mean, yes, the stock market is what made or break me to get to the $1 million level. Because without the stock market, I probably never would have gotten there. Not in 3 years anyway. And I'm an entrepreneur. I'm a survivalist, and I would do what I need to do to make money in any kind of economy or any kind of market. And I'm going to share with you guys some of the things I'm doing now that are still making money, not giving 100%, 200%, 300%, 500% returns like it was in 2020. I mean, 2020, I was killing it. Just killing it. And 2021 was not so great. I made some here and there, and I made money off of AMC. I made like $34,000 in 2 days, but because I swing traded it, not holding it for a movement. That's a stupid thing a lot of people are doing. Quit doing this movement crap. I mean, if you guys don't want to make money, don't even get in the stock market. I mean, I don't know what to tell you. If you want to play around with your money, just take it in the backyard and just burn it up and say you did it in the name of AMC or GME or whatever your movement is. I think people are going to get over these movements real quick when reality starts hitting now in this bear market. Everybody thought it was cool in the bull market. Now it's not so cool. Things are going down. People are losing money. Dreams are being crushed. It's going to be a bloodbath. Now, this is the alternative I was talking about. Currently, a lot of people are making no money whatsoever on the stock market. I mean, they're underwater. Okay, just like I am on, bag holding SoFi. Now, I've used Ally in the past for CDs, and the rates are way down from when I was doing it. When I first started doing it, it was like 2.5% or whatever they were giving. Now it's way lower, but it's still better than your basic bank. So don't just pull out all of your money out of the stock market and shove it under the mattress. You can still make money using Ally. And real easy to get started. This is called CD, Certificate of Deposit. And the no penalty certificate of deposit is 0.50%. And that means you can take your money out anytime and they will not penalize you. But if you want to do ones that are time-based, where you got to leave it in a certain amount of time, it's going to beat this percentage here. We'll show you here. Money market's not that great. Raise your rate. I will go with a high yield CD. And you can see the 12-month is 0.55, which is already better than the no penalty. If you go 18-month, it's 0.60% annual percentage yield. If you go 3 years, it would be 0.65. I don't think this bear market is going to be 3 years long. So if I were you guys, I'd probably go with the 18-month, which would be 0.60% annual percentage yield. And if you do that, you're going to make more money than what you're doing now, because you're making no money, you're losing money. And unlike with the stock market, this takes no skill whatsoever. You don't have to trade, you don't have to time the market, you don't have to know any kind of analysis, or you don't have to do anything except put your money in here and you'll make this percentage yield automatically. You don't have to do anything. It's easy. And you don't have to put all of your money into it, but I would put some into it. I have, because I'm not making money on certain things. So you have to change with the season. You have to react to what's happening. You can't just keep doing the same thing you've been doing and expect a different result. You have to, they say dead fish float with the stream, with the current. If you're a live fish, you could swim against it. Salmon do it all the time, sockeye salmon. And they get to their destination regardless of the flow of the water. And that's the way you need to treat the stock market or life in general. So I'm going to end this video. I'm going to be talking a lot about alternative ways to make money, even with this bad bear market we're in right now. And it could go on for quite some time, people. So prepare yourself mentally and financially, because everybody thinks, oh, it's just going to be a couple weeks, it's going to bounce back. I personally don't think so. Last stock market crash we had lasted like 18 months. It's like a year and a half. So think about that for a minute. Let that set in. And that was under the Obama administration. Now we're under Biden, and same thing's happening. Coincidence or not? You let me know. Anyway, make sure you guys like, comment, and subscribe. And if you guys want me to make more videos showing alternative money-making methods, because you got to adapt, like I said, let me know in the comment section below. Make sure you hit that like button and click that notification bell so you guys can see when I make new videos. So, peace out.